So, gonna talk some stocks, right? Gonna continue to kind of talk about the longs that I'm really confident in and the longs that I really like, whether that be on commons, whether that be on options, right? I've got about 4 or 5, maybe 6 or 7, 6, 7 longs that I'm really confident in right now. And it's just, waiting for a short opportunity next year, most likely, and playing the cards in the hand we're dealt currently, right? So the first position that I want to discuss is, again, the UNH position, right? The UNH, multiple opportunities being offered on this name, right? We have the long-term buy given underneath the May lows, which is where you can target that 380 to 480 range, right? Bid it, don't even touch it if I'm being completely honest. Open up your position on a longer-term port down there, right? Then we have our long-term / leveraged position that I'm really confident in here, right? So we have the taking out of these lows with the historic volume after the decline from 600 to 200s, the distributive range that we put in, and we're pulling back into COVID gaps, right? And the fear is very peak. We have our kind of initial low put in following the report in April underneath these February lows as well, right? So with that taking out of those lows, that massive capitulation volume, that kind of undercutting of these, and then the subsequent higher low we put in on a daily perspective, this is kind of our secondary position that we can open up on this trade, right? We can open up that secondary position on a shorter time frame perspective. UNHG actually opened up right when that happened, or 2x leveraged UNH shares, and that's 100% return at this current moment in time. So that's the position I would really be confident in down here in terms of a shorter term execution, targeting the lower confines of this gap and then adding in and trimming appropriately, right? So what I mean by this is opening up this position, covering some on this gap, monitoring how this structure develops, covering some more here, and then we can re-roll into that position on the reclaim of this progression gap, right? It's just a trade within a trade. Like I said, the best long positions and shorts usually have a much higher time frame perspective prior to the internal opportunity that we have. So that's why on this name specifically, especially with the way that this weekly chart looks, right, when you have that consolidation, you have the taking out of these lows, green and red kind of inside bar closure, failure to take out the highs, another kind of consolidated print right here on a weekly perspective following that massive move, the defense of that gap as well from the August 15th Warren Buffett news. There's a lot of confluence and conviction behind this kind of higher low, so that's a perfect opportunity to take some more adds into that position, right? We breached through the gap. We're reclaiming the lower confines of this gap. Another opportunity, cover some and re-add, right? And now we have our, really, in my opinion, the first super appealing options position. We have one down here targeting this kind of earnings gap, and then we have a potential one here, but this is a little speculative, and I do prefer the leveraged ETF instead here. But this is kind of our first very, very clean structural break, stall, harmonic pullback, defense of the gap, defense of the opening print from this day. And then now what we're developing here is a nice pop and internal higher low. That's all it is. This is a position that you can take on November's, right? It doesn't interact, it doesn't inflict, or not inflict, it doesn't intertwine with the report, so you're not going to have an increased implied vol on those contracts. If anything, you'll get kind of a run up into that. If you want to take some early November's, maybe November OPEX. And as well as just a pretty objective risk to reward. You have a really objective risk at that 335 spot. You have a really objective reward at 360 to 380. And it's just a beaut when I kind of look at how this structure is developing. So still a long-term buy in my opinion to 480, maybe 500. Still short-term commons trade to 380 to 440 to 480. And then an options trade setting up right now. 2 inside weeks defending a pivotal point, and if we do get the slippage, you can cover that and you can just buy it lower. All right, so that's UNH. Intel, absolutely phenomenal chart right here. With this kind of being our initial low, seeing the historic volume, seeing that low taken out, seeing the stall within the gap, seeing the consolidation and the climax and volume built out down here, and then for me, this was really like a long-term buy up to 40 to 50 in like 2013 levels, but as well as being, it's like 2007 levels, 2010, as well as waiting for the opportunity for a shorter term position, which we get in August, if I'm not mistaken, right? When we see this climax of the report, we see the continued lows getting bid, we see the really nice like 30% rally in just a couple of weeks, 40. And then when it consolidates and flags out directly underneath this 2643 range, which is where we had that seller within the gap 3 times, right? That kind of, when you think about a path of least resistance, when you think about supply and demand, that's kind of our signal that the supply is wiped from this range, and our draw is going to be higher, right? And our draw is going to be towards 29. So this is where the commons position is very vulnerable, and we get the gap up off news. We get the 30% gap. Pretty clean right here, right? You can cover some, and then if you want to take some leveraged ETF, some commons, you can take it here with room to add, because the better addition and reroll of that position will be at 2643. If we inevitably, if we eventually saw that, which we haven't so far at least. And so you have to leave room for that, but also understanding that this can just, with the volume, how this is structured, how this is developing, and the campaign behind this, it's not surprising that we're seeing the Ripper to 37, which is kind of the end-all target for this trade, with a little bit of room to 40 to 44 in the shorter-term position. Absolutely beautiful name, with opportunities to cover, reroll, all the way up to 40 to 50. I've talked about the underperformance of this name relative not only to the semiconductor space, but to the broader equity market as a whole. We're seeing historic volume. We're seeing the campaign built out. We've seen the accumulation developed. We've seen the party build out a position. The hands changed, the inventory collected, and the path of least resistance and supply wiped throughout this range. And the target pretty crystal clear from my opinion. So that's, I have not much more to say off Intel. Besides the progression gap being reclaimed and then the continuation towards 37 being kind of inevitable. Options position here is beautiful if you really want to take that, targeting the 30s, and then the commons position is just phenomenal on this, and I do think this has more room to run. I also do think that this is potentially going to continue to be a long-term position, right? Building that out down here is fine in my opinion for a longer-term port. You do actually have the initial low put in right here in 2024 following this report, right? Because we kind of see the bid in 2022, we see the rally, and we see the stall and exhaustion. We see the gap start to pile up down. The gap down start to pile up. And then we see this initial sign of a buyer where we see a couple of months of consolidation, a run up, and then prior to this report, we see the meltdown start to happen, right? So this is like our initial low of accumulation, the $29 to $30 range, right? And when that's reclaimed, that's a very good picture in my opinion, and that's a big time spot where a previous buyer was present. We see a pretty aggressive move and then a reclaim of that range. So the Intel chart, not much more to say about that I've discussed. I do still like Ford. We had a really clean break on Friday onto this gap, and then if we can reclaim this $12 spot, I do think that this can push for 13 to 14 range, and potentially even higher. If you want to have a longer term position on this, it's not that speculative in my opinion, right? COVID bottom to 2022 highs. I mean, $4 to 25, 26. We see an initial low kind of put in 2022, the consolidation happening, the taking out of those lows in November of 2023, the reversal, the stall, the gap down of the report in July, and then the accumulation continued to build out on our second low being put in August, and then our third low being put in April on the historic volume as well, right? And then we see the higher low, we see the draw into the gap, and then we see the secondary position and opening up, right? So this would be a shorter term trade for me within this range, the gap fill from July of 2024, but then we also do have an opportunity, when you really break in the context of this chart here, a potential good long-term buy on Ford, a potentially good long-term buy to take out the highs that we put in 2022, would not be super speculative to me, but we are speculators. But this would be a longer term position on that kind of time horizon, right? So it's just another key point in understanding your windows, understanding your time frame, understanding your position and what you're looking for and how long you're looking for it to be, to be open for. All right, we have XOM. This breached into the gap. It's now not looking the best on this daily sequence. I do think the energy can still outperform. It just kind of depends on how everything looks in terms of tech equity, because this can underperform, take out these lows, and then rally. I do think that energy performs relatively well next year, though. I wouldn't mind this being a stall and a breakdown to take out the April lows. RIVN still looks pretty nice in my opinion. 8.4% weak last week. This would be a shorter, smaller commons position targeting the 16 to 18 to 19, 20 range. But I still do like this. Lift was really clean in the 13s. Broke into this gap from May of 2022. And if we can reclaim this 2152 spot and hold it, that's an opportunity to try to take this to the full gap fill, right? This is one of those bottom feeding growth names that made new lows. Right, with the climax being put in May of 2022, the accumulation built out, the nice spikes throughout, but no real character change until we got that in August. And then you have a pretty clean target 17, 19, 21, and then we can potentially ride this to 31 if we continue to see this gap based in just the previous upper confines of this accumulation kind of reclaimed, that jump the creek last point of support kind of look that we can see on this name for a target of 31, right? And so that's, a position that you can take 70, 80%, cover some, and then re-roll and let the back half of this position risk-free potentially make your trade going forward, right? Nike earnings report this week. This is a commons trade that I like. It's kind of similar to Intel and goes along with the theme that we can see in LULU as well in terms of these retail names potentially seeing accumulations built out and potentially seeing our character flip. So I've talked about this a lot. The earnings report this week, we saw the undercutting of the COVID lows in August. We saw the preliminary signs of accumulation in honestly early 2024, but August and June and July is really when we kind of primarily saw those volume climaxes build out. This can kind of be one low, two lows, three lows, right? If you really want to look at this personally, three lows, and then if we can manage to put in a higher low here prior or off of the earnings report, I think that this is going to be in this low to mid $60 range, a really easy commons trade to 80 to 89 to 90 to 100. I think that this is right. Like I said, the preliminary signs of accumulation begin back here. The preliminary signs, the sell climax, the spring could be our change of character developing. So this is a name that I'm really watching going forward, and it's a top watch on commons. And then through that $80 spot where we've seen the seller be pretty dominant, could be wiped, right? If this is our change in character and higher low, this report tomorrow after hours is going to be big. Because if we can see kind of like a flush or something happen that gives us a higher low on a weekly perspective, this can be a really easy rally to 80 and then a roll on commons above 80 on the path of least resistance to take us to 85 to 90. And then I do think to fill the June gap as well, right? And then eventually that $100 spot would kind of be an end all target, potentially up to this 110 to 120 range as well. Like I said, the time frames are speculative. Not speculative, but the time frames are pretty important here. And understanding the cover and reroll, how to appropriately do that, right? Last name I'll discuss here is LULU. I like the LULU chart on a long-term position down here. COVID gaps being filled, lows being put in prior to this earnings report that we recently saw in August, and signs of accumulation on a name within a pivotal spot, right? So we obviously see the August lows put in, spark a really clean rally. We fail this March earnings gap from 2024. And then we begin to kind of see the breakdown happen, right? We see this breakdown happen in March. We see those lows taken out in March again. And then we see the August bottom or April bottom put in, give us a nice little rally, fill this gap, and then another gap down off this report, right? And then we see the August lows taken out. We see the April lows taken out. We see these undercut again into a report in September, not August, on historic volume, one of the highest volumes we've ever seen on this name, at a big time spot. And so with this trade here, for me, it's a commons position. For me, this could be a long-term buy. On a long-term buy, I would leave room for 130 to be those final adds on this position. But I think that this is a long focus, not only one for a long-term commons position, but two for a shorter term commons trade, right? We can take this commons trade here. We can ride it to 206. We can cover. We can potentially re-add this position on a higher low, targeting the 300 range, and then cover appropriately in there. But it's a little speculative now. This would not be like a massive position that I'm super confident in. But I do think that we have an accumulation building out ever since August, primarily. Our preliminary sign that sparked a really clean rally. And then we have a kind of a climax put in March and April, the progression really stalling in June, and then another historic volume sequence in September off of that earnings report, right? So this is a big name for me. I do think that this is going to be a good trade. I think a position in this, initially targeting 207 or 206, is going to be primarily my focus for now on a shorter term trade. On a longer term position, I think you can target 330 to 470 realistically. But I think you want to leave room for 129, sub 129, as far as taking out the COVID lows. Because this is kind of in, I want to say no man's land. Like there's a gap from COVID that's being filled, but I think being a little patient on this is a little bit crucial here. I do think that this is going to be a great trade. And I think it is a great trade. I mean, from right here, from this high or low we put in, you can get a 25% return, cover the majority of your position, and then see what we get following that in terms of the shorter term trade. And then as well as the longer term position, like I said. So that's really it for me. Still monitoring a lot of these names. Going forward, I don't think there's much of a short interest right now for me. We have September expiration tomorrow, so that could be something that happens. But yeah, going forward, that's really my focus. LULU, Nike, Intel, UNH, and then Ford, XOM, and RIVN being kind of smaller focuses of mine, but common trades that offer opportunities. Intel and UNH really being the only options positions that I deem vulnerable right now for my system going forward. I think that's pretty much it for me. I think Apple can still put in a UTAD. I'm going to be pretty interested in how this acts above the December highs. But yeah, that's really it. And same with NVIDIA above 183. This could be a path of least resistance. Could be a path of least resistance that changes hands. That's speculative though. We have to wait and see how that looks. But yeah, XLP taking out these lows for a third low of accumulation would be pretty appealing as well. That'll be something I'm kind of interested in case we take out the April and January lows for like a higher low put in here and an accumulation that sparks us to new highs. But yeah, I'm pretty set in stone on what I'm watching right now, unless some drastic tape flips happening going forward. It's really the same names. LULU is an interest of mine. Doesn't have a lot of my focus. It's more of a smaller commons position. With a potential opportunity to take this on a longer term buy, leaving room, right? I do think that this will inevitably revert to 270 to 330. I think that can be your target for a shorter and longer term trade. Just being able to leave room is pretty pivotal though. That would be about a 130, 110% reversal. And if we see all the way to 128, 150. So that would kind of be my focus on this name. First stop 206 though, and then we have to see if we revert to 130. But this is going to be a focus going forward. A lot of these retail names potentially looking good going into next year, right? Target and COVID gap, taking out the April lows with a massive amount of volume, and then a nice amount of volume coming in on the November 2024 report, taking out the 2023 lows. This could be a name to keep on focus. Excuse me. The retail names are potentially ticking back up here, is what I'm saying. So that's pretty much it. Just a quick little rundown. Same watches realistically though.